angel one. We do have the WPI inflation data, which is flashing on your screen. So 1.84% is where the WPI data has come in. So that's an uptick versus the 1.31% on a month-on-month basis. But remember that the WPI data was expected to be around 2% for the month, and it's come in just about below 2% in terms of levels. So that's the preliminary data that we have. We have primary articles inflation, which is coming at 6.5%. So there's an uptick which has taken place on a month-on-month basis. Any more details, Mangala?
But we do have a bunch of others as well. So the commodity index is up 0.1% on the month. We do have some data coming in from, fuel and power as well. Fuel and power, as I see, is actually down by 4.05%, and this was lower, a lot less lower in August, 0.67%. Manufactured products have actually seen an inflation of 1%. This number was 1.22% in August. And you have all commodities index, which were up just 0.1% as well. Food, 1.1%. Primary articles, interesting out there as well, they are up 0.4% on the month. So month on month, there has been a bit of an inflation, and primary articles is the one which is actually doing a lot more than all the other parts of all the other components of the WPI this time around. And potatoes, 78%.
Yes, absolutely. And the food inflation, which is coming at almost 10%. So it's coming at around 9.45%, for 7% to be precise. So that's an uptick that we've seen on a month-on-month basis. Just want to point out that we'll also wait by for the core WPI, which is possibly expected to ease. So let's see if that takes place on a month-on-month basis. And overall, we have even a couple of other data points, such as the fuel, which is in deflation mode of around 4%. We do have Madan Sabnavis, Chief Economist, Bank of Baroda, joining in with his quick view on the WPI data. Mr. Sabnavis, thanks very much for joining in. What is your reading of WPI, which is a sub 2% figure?
In fact, we were looking at a number of 2.2%, so I think 1.8 definitely sounds better. So I would tend to think that we have to be a bit watchful of this number, because I do see an upward tendency in the coming months, primarily on account of the fuel prices, something which we haven't really seen. I think from what you mentioned, there's been a negative growth in prices for the fuel component. That is something which should be moving upwards, given the fact that the trend has been trending upwards. And second, I look at even core inflation. I think core inflation is something where we are seeing a number of manufacturers stating that they have been holding on to their input costs for a long time, and now that they have they are in the process of increasing their final prices, there could be a gentle push in the upward direction even for manufactured products. In terms of food inflation, I think there should be some bit of moderation which we can expect, primarily on account of the expected good Kharif crop. So I think the only apprehension is that the monsoon is still not fully withdrawn from the country, and therefore we have seen in states like Maharashtra, there is definitely a case of vegetable prices being high, and that is something which will probably remain for some more time. So we'll have to be watchful of these numbers, but on the whole, I think 1.8 is a good number, but we could be expecting the number to move upwards in the coming months.
Okay.
We can expect the rate to move upwards in the coming months. The question is then what happens to, what the RBI has on their minds, because this time around they did change their stance to accommodative. What's the sense that, neutral rather, from withdrawal of accommodation? What's your sense in light of this higher inflation, would they do?
See, actually, if you're looking at the RBI, I think they're targeting the CPI inflation number. So I don't think the WPI will play a major role in terms of any decision taken by the RBI, even though they do keep this at the back of their minds, because what happens with WPI finally also gets reflected in CPI. But in terms of the RBI's policy, I think one has to be a bit more patient from the point of view of industry and wait till February. The reason being that the RBI's projection of inflation for the third quarter is 4.8%, which is closer to 5%. So I think while the stance has been changed to ready the market for a possible rate cut in future, I think it's still a way off until this CPI inflation number comes at more hospitable levels. Right now, we're looking at a number of close to 5%, both for September as well as September.
Okay, all right. Well, we will have the CPI data this evening. So what is your expectation, Mr. Sabnavis? Any takeaways from the WPI which you can probably extrapolate onto the CPI?
See, it's good. We have a projection of 5.1% for inflation for September, and I think a large part of that is going to be contributed by the food basket. What we have seen is that the core inflation in part of the CPI has also been moving gently upwards, 3.3, 3.4%. But I don't see that being the major issue in this particular month. It's going to be more on the food side, more in the horticulture products, as well as pulses, which have been the problem areas even in the earlier months.
Okay. So what would your entire reading be, based on what you are seeing on a trajectory for WPI? Because at this point in time, we are also dealing with maybe fluctuating crude prices with what's taking place in the Middle East. In that sense, what would your average be in terms of the WPI data based on the commodity cycle?
So in terms of the next few months, I would look at an average of 2 to 2.5%, because if you looked at global commodity prices, not just food prices, but also of metals, they have also started moving upwards. And ever since we've heard of the stimulus which is being provided by China, I think there's been a tendency for commodity prices to increase further. And this is something which will continue in the coming months, given the fact that China is the largest consumer of most of the metal products. So this said, I think this is going to feed into our manufacturing inflation indices also. So there will be a tendency for core inflation to also keep moving upwards. Nothing really something which is going to startle us, but on the whole, I think we're looking at this 2.5% in the next 6 months.
When do you expect the first cut from the RBI?
Yeah.
When do you expect the first cut from the RBI?
But from the RBI, I think it's February would be the first, would be the earliest. Definitely not in December. And I think even in February, it would be a call taken after they do a review of how inflation has panned out. Now, again, if I go back to their own forecast, they're expecting inflation to come down in the fourth quarter. So one would tend to believe that by December, you'll have a full idea about how the Kharif crop has turned out to be, as well as how the prices have moved. And in case it tends to be moving towards satisfactory levels, I think we could have a cut in the month of February. I think there's a divided view here. There are some economists whom I've been talking to who do believe that in December there could be a cut. But I think with a number of 4.8%, it would be a bit hard for the MPC to actually agree to the fact that inflation has come down on a durable basis.
Okay. So you're expecting the first cut from the RBI to be in probably February. The quantum and what would the timeline of future cuts be post that?
So I think the quantum would probably be 25 basis points to begin with, and depending upon how inflation continues, because that's going to be dependent a lot on the geopolitical situation as well as the Rabi crop, because once we go in towards February, it will be a case of the Rabi crop and their prospects. But assuming everything is normal and we are in this region of 4.5% of CPI inflation, we could be looking at around 25 to 50 basis points cut in this particular cycle. And this would be probably the average of what CPI inflation, the repo rate has been in the last 10, 12 years. So 6% appears to be a fair value for the repo rate, with an inflation in the region of around 4.5% on an average basis.
Okay, all right, Mr. Sabnavis, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the September WPI data, which is coming at around 1.84%. Bank of Baroda expects the first cut from the Reserve Bank of India to probably come in Feb, and that too to the tune of around 25 basis points. We'll take a short break. Up next, we'll focus on stocks that are moving in trade on the back of news. Stay tuned.